The first candle scalping strategy is by far the easiest way to become profitable fast. I started trading over 5+ years ago and I've tried hundreds of different complex trading strategies. And if someone would have told me this when I first started trading, I would have been able to have consistent winning days like this, and this much sooner. And in today's video, you'll learn a simple and proven approach to trading, along with a strategy and 3 simple steps on how to execute this strategy. And then I'm going to show you real trading examples that you can use in real time. Okay, so why is it that most traders lose when it comes to trading in the markets? There's a few reasons why this could be a possibility, right? Either they don't have a proper strategy or system, either they're trading for the money, they don't understand technicals, they don't have proper psychology. There's plenty of different reasons why traders lose when it comes to the markets. And one of the most common reasons on why traders lose is because they don't have a proven system and strategy. And if they have a proven system and strategy, chances are the majority can't follow their system and strategy. This can be due to lack of discipline or revenge trading, or you have a flawed psychology. But a lot of the times, even if you do have a profitable system, it's one thing having a system and it's another one following it. And as you can see, there's so many different trading strategies when it comes to trading in the markets. So many people trade Fibonacci's, candlesticks, right? Supply and demand, support and resistance, breakouts, right? There's so many different ways of trading. And as a beginner trader, when you come into the markets, you might be very confused on what to look for just because there's so many different trading strategies that you can find online, that you can find on YouTube. And you might be very confused because you're going to question which is the best strategy for you. And I just want to say that there's no one trading strategy that fits all. Everyone is different and they're going to have their own trading personalities. What you have to realize is that every single trading strategy works. I know a lot of traders that are profitable trading support and resistance. I know a lot of traders that are profitable trading the break and retest, trading supply and demand, trading ICT or SMC. It doesn't matter what strategy you trade as long as you have a proper edge and you follow your system. Another possibility on why some traders fail is because they have too many indicators plastered all over the chart. When I first started trading, I was a trader that had so many different indicators. I had the MACD, I had the RSI, I had the Bollinger Bands, I had the EMAs. I had so many different indicators plastered all over my chart that I was so confused because I was relying on indicators. And when you rely on indicators, what you have to understand is that indicators are lagging price. The only thing that matters when it comes to the charts is the candlesticks themselves, because that is what matters in understanding the difference between the buyers and the sellers. So if you have too many indicators, then you're going to be confused. And guess what? This took me years of losing to understand what I'm about to share with you. And that is simply simplicity equals profitability. What you have to understand is that when you simplify things, when it comes to your strategy, when it comes to your psychology, right? Simplifying everything down is going to make you profitable, because when you trade, less is simply more. When you take too many trades, majority of the times you're going to end up losing, right? When you take 1 to 2 quality setups a day, that is much better than taking plenty of trades. In trading, what you have to understand is that quality is going to be better than quantity. A misconception when it comes to trading is that the more knowledge that you learn, the more profitable you're going to get. And that is just not true. Just because you understand more strategies does not equal profitability. If that was the case, a lot of you guys would be profitable traders because all you're doing is hopping from strategy to strategy. But when you do that, you're never going to have a solid system and foundation, and you're never going to be able to understand if you have an edge in what you're trading. So in today's video, I want to share with you guys a simple strategy that I've been using for the past 5 years consistently. And it is one of the most simple strategies that you can use. And what is this strategy? And this is called the first candle scalping strategy. And that is exactly what I'm going to break down in today's video, is understanding what the first candle strategy is and how we can use it in our day-to-day trading. And as you can see, the first candle scalping strategy, along with other concepts that I've taught on this channel, has allowed me to make over $90,000 this month trading. What I want you guys to understand is that when I'm talking about these concepts on my channel, is I like to combine all these concepts together because it all falls under the same system that I trade. So each individual video that I have, you can combine it together, and that can be used to build on the system and foundation on how we trade on a day-to-day basis. And as you can see, as I mentioned, I've made over $90,000. I've made $32,000 $41,000 on week number 2, $41,000 on week number 3, and as the time of recording this video, I'm currently up $18,000 on week number 3. And as you can see, this is my P&L graph on the left hand side here as well, and all these profits are verified. So with that being said, let's go on to exactly how to use the first candle scalping strategy. So what does the first candle tell you? The first candle tells you a lot. Once that first candle happens, it can give you a potential overall bias for the market because the first candle is very important. It also tells you how to find winning trades and accurate entries. What's great about that first candle is there's going to be a lot of opportunity around these areas, so you can find a bunch of winning trades and you can really have a lot of precise entries when it comes to trading the first candle strategy. And finally, it helps you avoid unnecessary losses. A lot of times, as I mentioned, that first candle is very important, so understanding the overall market direction, and it might help you avoid unnecessary losses that you otherwise would have taken if you don't understand the first candle strategy. So in today's video, we're going to talk about the first candle strategy. And the goal of today's video is to make consistent profits trading using a simple and proven strategy within the first 90 minutes of market open. And what's great about this strategy is that it's repeatable and mechanical. It doesn't require any daily bias, fancy indicators, and the best part is it sets up every single day. And what this allows is that it takes the guesswork out of your trading, so you know exactly what you're looking for every single day, and all you have to do is follow the system and strategy. So as you can see, we have a chart here, and there are so many candles on a chart. You can see we have bearish candles, we have bullish candles, we have bearish candles, we have uptrends, downtrends. There's so many different types of candlesticks and candlestick formations on the chart, so this can be a little bit confusing when you are a beginner trader. So what do we want to focus on? Instead of focusing on the full range and focusing on all the candles together, what we're going to be doing is focusing on the first candle of a new market session. So as you can see right here, once we have that first candle played out, you can do this on the 1, the 5, or 15-minute time frame. I'm going to show you what I personally like to use depending on the market condition, but all we're doing is marking that first candle of a new market session. And the reason why we want to be marking out the first candle of a new market session is because the most volume occurs in the first candle. As you can see right here, what we have marked out is that first candle high and that first candle low. And within this first candle, you can see we have the highest volume. If we're looking at the volume plastered on the chart, right at 9:30 a.m. Eastern Standard Time, you can see the highest volume occurs in that first candle. Volume is very important, and when we understand that there's the highest volume within that first candle, we understand that that first candle is going to be very important. And as you can see right here, out of that first candle, what session and what time are we going to be marking out that first candle? So as you can see here, we're on the NASDAQ chart, which is the NQ. And what we have marked out here is the pre-market, which some people may call the London session. We have the New York session, which is when the market opens. We have the after hours, which is also called the Asia session as well. And then we have the pre-market, and then we have the New York session once again. So there's really 3 primary sessions when it comes to trading the markets. The main one that we're going to be focusing on here is what's called the New York session. So preferably we want to be focusing on the New York session because, as I mentioned, this is where the most volume occurs. You can see in the pre-market, there's not as much volume, but as soon as the market opens, you can see how big of a volume spike we get. And that is right at New York session open. Similar thing, right? Low volume in the after hours and pre-market, as you can see right here. And then all of a sudden coming to market open, a huge spike in volume. And that's why that first candle of the New York session is very important. And when is the New York session and when does it start? So the New York session starts at 9:30 a.m. Eastern Standard Time. This is very key, right? A lot of people might mix up the time zones depending on where you live. So if you do not live in Eastern Standard Time and you live somewhere else in the world, make sure you change or adjust your time for 9:30 a.m. Eastern Standard Time every single day. It's called the New York Open. And the next question I get asked is that it does work in every market: stocks, futures, crypto, Forex. My personal favorite is stocks and futures since it does work the best in the New York session. As I mentioned, if you're trading crypto or Forex, you're going to have to either trade the New York session, the London session, or a different session as well, but the overall concepts still apply. So how do we execute this strategy? So what we want to do is wait for the market to open at 9:30 a.m. So we want to get to our desk right at 9:30 a.m. And you can see currently we're on that 5-minute time frame, and we're going to let that first 5-minute candle play out. So once we have that first 5-minute candle played out, what can we do next? So step 1, what we want to do is mark out the high and low of the first 5-minute candle of New York Open. So as you can see right here, we have our 5-minute high and we have our 5-minute low. You can do this on the 5-minute time frame or the 1-minute time frame. The easiest is to just do this on the 5-minute time frame. And as I mentioned, you just want to mark out the high and low of that first 5-minute candle. Now what we want to do is wait for a clear direction in the markets. As I mentioned earlier, what's great about that first 5-minute candle is it really gives us a clear direction on where the market wants to head within the first 90 minutes of market open. All we're doing now, after we mark out the first 5-minute high and low, is we're waiting for a push towards the upside above your 5-minute high, or now we're waiting for a break below your 5-minute low for a continuation towards the downside. And as I mentioned, we're currently on the 5-minute time frame, but let's go on to step number 2. Now we're on step number 2, and we want to wait for a 1-minute candle close above or below the 5-minute range. So as you can see, we're now on the 1-minute chart, and we have that 5-minute high along with the 5-minute low marked out. You can see this by marking out that first 5 candles. 1, 2, 3, 4, 5. And you can see we have the low and we have the high marked out. Now we're on the 1-minute time frame. What we want to do, as I mentioned, is wait for a close above or below the 5-minute range. So in this case, you can see we have a candle close below. What does a close below mean? It means a strong candle close with a body underneath. So as you can see right here, once the body closes underneath, that is when it confirms the move lower. You can see right here, we have a lower wick. It wicks through, but ultimately the body did not close below the 5-minute range low. What we need in this case, as I mentioned, is a full body candle close underneath that 5-minute range low to confirm the move lower. Similar thing to the upside. We want to see a strong body candle close above. What we don't want to see is a large upper wick. We want to see that close above, which is going to confirm the move higher. So now we're essentially just waiting for the retest of the 5-minute range high or 5-minute range low. So once we get that candle close below, you can see nice push towards the downside. There's a few different ways to determine if there's displacement. You can be looking for the immediate retest. There's different criteria to look for, but in this case, you can see nice solid push towards the downside. All we're going to be doing now is waiting for that retest of your 5-minute range low for that continued push towards the downside. If we're bullish, we're going to be looking for the break above, retest off your 5-minute range high for a push higher. So these are the two scenarios that we have played out, and now we're just waiting for that retest. And as you can see, step number 3, all we're doing is marking out our entries, stops, and targets. So we have the 5-minute range high, and we also have our 5-minute range low. You can see price breaks below. We're waiting for step number 3, which is our entry. You can see price taps into our key level with a weak candle closure. We can get in as soon as it taps the level. We can wait for the candle to close. There's a few different entry models that you can use. You can check out my YouTube video on how to enter a trade, but we'll go over plenty of examples here in a second. But as you can see, what we're doing is having our entry or their stop just to break above that 5-minute range low. And now we're looking for low of day or a 1 to 2 risk to reward. So that just means if we're looking to risk around $100, then our reward we want to be at a minimum of $200, right? This is a good rule of thumb, and this is exactly how to execute this strategy. You can see this strategy is fairly simple, and now I'm going to show you a lot of examples on exactly what this looks like in real time. As you can see right here, we're on the Tesla chart. We're currently on the 5-minute time frame, and I'm going to go through a week of price action to show you exactly what the first candle strategy looks like. So as you can see right here, we're on the 5-minute chart, and all we're going to do is mark out the first candle high along with the first candle low. So this is on the 5-minute time frame. Once we have identified this, now we're waiting for the break above or the break below for continuation towards the downside. Now we can go on to the 1-minute time frame. Now we can play out the tape. So as you can see right here on Tesla, we have our 5-minute range high plus our 5-minute range low. And now all we're doing is waiting for a close above or below on the 1-minute time frame. And as you can see right there, we have that 1-minute close right here. Now what we can be looking for is continuation towards the downside. So right here, you can see what we have is the immediate retest. So when you're trading the first candle strategy, there's a few different ways you can be looking to enter in. You can look for the immediate retest, or you can be waiting for the longer term retest off of your key levels. There's really no right or wrong way to enter in a trade. It's all dependent on how aggressive you want to be. So as you can see in this case, we have that candle closure. The next candle, you have that immediate retest. This is exactly where we can go look short with a quick stop just to break above this candle high. And now we can be looking for 1 to 2 towards the downside. Now let's play out the tape. And as you can see right there, we end up having this super solid push towards the downside once we ended up getting that candle closure underneath with a stop just to break above, looking for that 1 to 2 risk to reward ratio. Now let's go on to the next day. Okay, so we're on our next day here on Tesla once again. And what we're going to do is mark out the first 5-minute high and the first 5-minute low. Once we have that marked out, now we're going to go on to the lower time frames to wait for a candle close above or below our key levels. So once we have this played out, now we can play out the tape. You can see right here on Tesla, we ended up getting this break below here with another candle closure underneath this 5-minute range low. Now all we're doing is looking for a retest off this level for continuation towards the downside. And as you can see right there, this is where we get that weak candle closure or our confirmation candle. Once we get this is a good sign that price does want to indeed continue towards the downside. So this is where we can go look in short with a stop loss just to break above, and we could be looking for a 1 to 2 towards the downside. Now let's play out the tape. And as you can see right there, Tesla ended up having this really solid push lower. Once we had that confirmation candle, it actually came up close, never closed above our stop loss, and we end up having this nice push all the way back down in towards our key levels and below. So this was another good example of using the first candle strategy. Now let's go on to the next day. We're on the next day here on Tesla once again, and what we're going to do is just mark out our 5-minute range high along with our 5-minute range low. We already know the hang of it here now. What we're doing is waiting for a break above or a break below for continuation either below or above our 5-minute range high. Now let's go on to the 1-minute time frame. So as you can see right here on Tesla, we end up having this really solid push towards upside, strong candle closure, a couple immediate retests as you can see, another retest once again, nice lower wick here, strong candle closure. This is where we can go look long. In this case, our stock can be just a break below. And now what we're going to be doing is looking for a 1 to 2 risk to reward back towards the upside. Now let's play out the tape. But as you can see right there, we end up having this really solid push towards the upside, right? We're just using a strict fixed 1 to 2 risk to reward ratio. So if you do have any other higher time frame key levels, those are areas you want to be scaling at as well. But super solid entry once again, you can see how well this level was respected, and we had that nice continuation towards the upside. You can see we came back once again for another touch, and then we ended up having another push once again back towards the highs. Now let's go on to the next day that we have here. As you can see, we're on the next day here on Tesla once again. What we're going to do is mark out our 5-minute range high and our 5-minute range low. Of course, if we do want to see upside, break above for a continuation higher. If we want to see some downside, break below for a push towards the downside. Now let's go on to the 1-minute time frame. As you can see right here for Tesla, nice push towards the upside, strong candle closure. You have an immediate retest here. You can get in on this candle. Price comes back once more, retest once again. You can get on this candle right here. What you can have is a stop loss just to break below, and you could be looking for a 1 to 2 once again back towards the upside. Now let's play out the tape. And as you can see, once again, Tesla really solid reaction right off of our 5-minute range high for this nice continued push higher. And as you can see right here for Tesla, this is the most recent price action. I'm not using this in hindsight or cherry picking examples. This is the last 5 days of price action on Tesla as of the time I'm recording this video. And you'll see at times when the market is moving and there's a lot of momentum, we will respect the 5-minute range high and low very well. So now with this being said, let's go on to one more day here on Tesla. And as you can see here, we're on the last day here for Tesla. Once again, we're going to mark out our 5-minute range high along with our 5-minute range low. We either want to see a break above for continuation or a break below for this continued push towards the downside. Now let's go on to the lower time frames. Now let's play out the tape. So as you can see right here for Tesla, we get that candle close right here at this 940 candle, and now we're continuing lower here as well. So what we can be doing is looking for the retest off of this key level for a push towards the downside. So as you can see here for Tesla, we end up having this super solid push lower. We wick up in towards that 5-minute range, and now we have a weak candle closure here as well. We can wait for a confirmation in this case. We're just going to have a little bit of a wider stop, but we can look for an entry with a stop loss all the way a break above, and now we're going to be looking for a 1 to 2 towards the downside. And as you can see right there, once again, Tesla really solid push lower right off our key level using this one candle strategy. And as you can see right here, I just went over a week's worth of price action on Tesla. This was the most recent price action that we've had. And you can see 5 out of 5 trades ended up being winners. Of course, this is not always the case. Sometimes you're going to win more than you're going to lose. Sometimes in rougher markets, you're going to lose a lot more than you win. But I want to mention that this setup occurs every single day in the markets, and your job as a trader is to identify when it's going to be high probability versus low probability, and you can do that through looking at tickers with momentum. And with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop a like and sub. I'll see you guys next week for a brand new video. Peace.